Hello and welcome to my channel Let's Trade, where we'll be doing technical analysis of different tickers, but our today's topic is doing technical analysis of gold and silver using top down approach. So without wasting any further time, let's start with the technical analysis. So what is top down approach? Basically, that's a natural question. So top down approach is basically an type of technical analysis where we goes from higher time frame to lower time frame. Higher time frame can be 3 months, like quarterly, weekly, monthly, daily, and lower time frames will be 4 hour, 1 hour, 15 minutes. And but what are the advantages? Why should I do that top down analysis? If I'm intraday trader, if I'm swing trader, why should I do higher time? Why should I go from higher time frame to lower time frame, where from monthly chart to 15-minute charts? What are the advantages? So the first advantage is you get a definitive trend where the market is going. On the higher time frame, on the monthly or daily time frame, is the market is in the uptrend, and on the lower time frame you are thinking of going in the, or you are thinking of shorting something, then the odds of trend going against you are higher if you go against the trend. But if you go with the trend, the odds of winning is higher. If on the uptrend you wait and see for a buying, you wait here and see for a accumulation and then go buy the stock or commodity, whatever it is, then the chances of you hitting the profit on the longer run is high. First is this, and second is reducing the market noise. The market noise which big players or algorithms, the algo traders, the big firms make in the lower time frame, the money involved in that market is low. Let's say if I'm trading Reliance or on the even the gold on the higher time frame, then if I want to move gold from $1 here to $1 here, it takes less amount of money in the lower time frame. But if in the higher time frame, I can see the gold from moving the gold from 4,000 level to 5,000 level, it takes humongous amount of money and no single player can do that. So that's why it's always advantageous for us to go from higher time frame to lower time frame, which reduces noise and tells what is the clear definitive trend. Third will be you get a good market overview of while trading. You know, on the higher time frame the trend is clear, the wicks are not there. You can clearly see what is the supply zone where I can sell, what is the demand zone where I can find buying trades. In between of that, you will not do anything, and by just not doing anything you'll save a lot of your money. So the third point is it gives you a proper and advantageous risk to reward ratio. Okay, now let's move further. So let's use this approach for our advantage, and let's start the technical analysis of gold, which we can say XAUSD also on the forex or the global market. In if you are trading in the Indian market on MCX or even NCDX, then you can say gold, otherwise we'll say XAUUSD. Okay, so as you can see in here, there is a clear supply zone, or you can say resistance, where market has came for the first time, took rejection, came for the second time, took rejection, accumulation happened in here in the sideways range, accumulation happened, again market came, rejection, but market didn't went down all the way, market again came. See, with every time market is hitting in here, this span of going down, here it went this much up, then it went less up. This span of going down is closing the gap, right? And because of that, here we can clearly see the sellers have exhausted. They tried to push the gold here again and again, but when market closed down on that level, there's no other option remaining from the seller. And this was the point where central banks and other big institutions were involving in the gold market. And from here market has went up, took a little bit of pause in here, again went up, took a good 4 to 5 months of pause, and then went up again. This has been the trend, and then it went down. This is a good correction. So what are the corrections? Correction is something which market performs in the trend. Like market is going up but it can't go up, like there will come a price where buyers will see that, oh, this is not a lucrative price anymore, there's nothing more where I can buy. And from here buyers, either seller starts coming or buyers going down. Either way the market starts coming down, but still not all the buyers has went down, so market doesn't come like this has went up and then it's rapidly. This will be a market crash. This doesn't happen in uptrend, or this should not happen in if it's uptrend. So what happens is market gradually goes up or aggressively goes up but slowly comes down. It makes like a flag and pole pattern. This is the pole and this is the flag. And market here accumulation happens, market goes up like this, comes down slowly. Again buyers see, yeah, this is a good price, I can buy in here. There's more potential in that. There can be fundamental reasons for it or news or any kind of reason. Here buyers accumulate and then again the trend goes up. This goes on until the price is lucrative for buyers. Once it's not, market starts a selling opportunity. Here market will stop here where sellers will accumulate and slowly the shares or any kind of future contracts, option contracts will share their hands, and then market will be going down. This is a basic cycle. But in gold right now we are in the uptrend. As you can see, this was the horizontal resistance, broke it, waited, went up, coming down for correction. So from the monthly time frame, what we have learned from the analysis, that on the monthly time frame market is doing a healthy correction. Let's go on the weekly chart. So on the weekly chart, as we can see, it confirms our the basic logic of trading. Market went up, waited in here, market went up, waited in here, market went up, waited in here, market again went up, waited up. But here you can see it's a big red candle, which is not good. Here also market went up but a big wick has happened. You can see the wick of this candle. Look at this wick of this candle, it is a big wick. This shows that something in the trend is not going right. Then again market went down, there's a big upside. The only wicks comprises of a big, like it's around $800 of change, and it's a big thing. Just in 2 weeks market has gone and corrected from with $800 or more. That was a part of it. Then as you can see, the market again went up for a little but didn't cross this line. This was the first definitive sign that trend has changed. Then with 3 consecutive candles and a big red candle, market has again went down. Here it went down, but as it's the first time it is coming for a demand zone, it took a strong rejection and went up for a while, then again came down. This shows us that the change in trend has happened. The trend is not uptrend anymore, at least not in the weekly time frame. Okay, and then what happens is market has been coming down gradually from here. This is a sudden down movement, then it is going gradually coming down, but it's coming down. And now you can see this is a strong demand zone. The market has taken a retest from here, then went up. So this strong demand zone, and you can clearly see this is first week happened, this is second week happened, this is third week happened. This is buyers are not letting the market fall down from here. Market is steady and hold its position around this area. We'll see this in detail in lower time frames, but from weekly time frame what we can see is market is waiting and the momentum of going down has been slowed. On the daily time frame, it again confirms what we already know, which is market has went up, change in trend, gone up, sharp reversal, gone up, sharp reversal, and the trend had changed. This was higher highs, higher high, higher high, but now this is what? This is lower high, low, again lower high, again lower high, and the go on, so on and so forth. As you can see, market has been coming down, but in the past few days you can clearly observe that this is a demand zone, right? This is a demand zone. Market has been waiting from here. It started going up from here and now it has been waiting from here. Here it has went sideways, which can mean two things. Either the if the NFP doesn't come good or the results as expected, then market can go down, but don't sell before a retest. Let's wait for the retest. Like in the buying zone, it went up, then retest, and then it went up. That's the longer move. We have, if we want to play that, we have to wait for that retest. If it goes up, you can buy for it, but there are less chances of that happening. As we can see, the accumulation in here is happening. It totally depends on next week's NFP, how market moves. But from the top down analysis, what we can see here is on the daily chart, market has been in the sideways range, and we can buy above this level and we can sell below this level. Be cautious in this level. Will not do anything. If you are a long term investor and believes in buying in the gold, this is not the opportunity. Don't buy at this position. Let's it give a healthy uptrend first. This is now in the sideways range, that too in a lower low, which means in a downtrend. Let's go on the 4-hour chart. As we can again see, market has been holding its position. This is a buying point and market has been holding the buying point strongly. Nothing is happening in here. Market comes, buyer. Market comes down, buyer goes buying on the buying spree. Market comes down, buyers come in here, and this has been happening steadily. But again, the second thing which you can see in here, or we can observe in here, is the highs are getting lower and lower, again lower and lower. So if you connect these dots, you get a up trend line up here, and you get a horizontal demand zone in here. So track this. If it breaks this trend line and retest, we'll go for a buying trade. If it comes down here with a retest, there will be good selling trend. Okay, let's move on the 15-minute chart. On the 15-minute chart, there is not that big of a buying. As we can see, here is the buying zone, but market has been making a head and shoulders pattern in here. So this is first shoulder, this is head, and this is second shoulder. This means market can go down from here, but we'll have to wait. This is not the area where you can buy. Okay, you have to wait before market comes down here, and we have to wait before market goes up from here. This area, this is a no buying zone. Okay, let's move from here to the silver chart now. So on the silver chart, we'll do same top down approach, and you can see market has been going down. Here market has accumulated first accumulation zone, second accumulation zone, and silver is flying. Here silver went on the flying spree. So what we can see on the monthly chart, silver went up and now it's half the way down from its trend. See, this was a horizontal line. Here it started and around 50% it came down. Either it will wait from here or accumulate and go up, or it will make some kind of pattern which is like this. It will accumulate and then go down. That can happen also. But right now what we can see is market has been waiting since here. It's a doji candle on the monthly chart. On the weekly chart, what we can see is change of trend. The uptrend has stopped here. The started, accumulated, going up, and now lower highs are coming. Consecutively lower highs are coming. Let's go on the daily chart and observe. On the daily chart, you can clearly see that there's a theoretical trend line. We have drawn but never touched for the third time, so we can't confirm it, but it's a good trend line as the angle matches around 45 degree, and the lower part of it is also kind of trend line. So market is closing down in here. As you can see, the upper part and the lower part of this trend lines at the starting was huge, but it has been closing down since, which is a good part. The more market will get squeezed, the higher the chances that it will broke out of trend level. So let the market squeeze. It's always great if the market squeezes. We get a good risk to reward ratio, we get a good buying trade with a great possibility. Let the market squeeze. If it squeezes more, it's healthy for us. But let's wait for this week's NFP. Okay, so on the daily chart we can see the market is in the downtrend and now has been waiting on between 62 and 54.5 level. Let's go on the 4-hour chart. On the 4-hour chart we can clearly see market is in the sideways range. Here there is buying zone, here there is selling zone. If market goes above this, we can see for a buy trade. If market goes down from, we can see for a sell trade. But here is a clear sideways range. If you are a intraday trader, this is way beneficial for you. Buy above this and sell below this level. Buy above 59.50 and sell below this, and in between there's nothing much you can see. Just wait and watch if you want to use a clear risk to reward ratio. On the 15-minute chart, what we can see is market is in the downtrend. From here it is coming down and steadily down, so it can go further more. Let's not touch it, but wait for this level. Wait for 5.65 to reach by the market, and after that only you can trade. Here also there is head and shoulders pattern where the shoulder is here, head is in the middle as the chart pattern shows, and second shoulder. Market will go down from here, retest, and again will go down from here. Wait in the between area, don't trade in the middle areas. Okay, if you keep your money safe, don't trade in here. Let it go up from here if with a strong pattern. Like, see what the market has been doing. If you talk what the market has been doing, market is coming down like this. Okay, like this, and it's now in the middle. So let's wait for this area. If it goes up and retest, it will be a double bottom pattern like this, which is a good buying opportunity, then buy. But if doesn't happen, if it goes and now it's in the middle, it can be a good selling zone also. If sellers come, they will push the price here, and you can make a good selling leg. You can sell silver in here. So that's all for today. I'll be making these analysis videos weekly, top down analysis videos weekly. So subscribe my channel to never miss out on such videos, never miss out on such informational videos. And for today, signing off. Let's meet in the next video.